who will be having and sharing our opinion on auditing. But to bring everybody to speed, especially those who are just who are new on this platform, this is a concept of KCP. We want to share our competence, rub our opinions on as many co-professionals who are willing to also sharing their views on similar topics. So as much as possible, please, the platform will be very open for you to ask questions of interest to you and also make valuable contributions. We are very much open to together making this session a very interesting one. Before we go in-depthly into this, is there anyone who is just joining us for the first time? Any first timer on this platform? All right, so we give the first timer the opportunity to quickly introduce themselves, your name, your background briefly, whether you're a student or where you're working, and what you hope to get from this session, and most importantly, how you get to know us. Baba Yele rather, do you mind if we start with you?
Good evening, sir.
Yeah, evening, my brother.
Yes, sir.
Yeah, let's get to meet with you. My co-audience would like to know you, your name. Are you a student? Oh, I think your network is not too stable. The next person can just take the place. Adeni.
All right. Good evening, everyone.
Yeah. Good evening, brother.
My name is Adini Yamada. So currently, I'm working with Sarah Sciences as a finance associate there. So I'm also a chartered accountant. I get to know KCP through LinkedIn. So I actually showed the flyer on LinkedIn, and luckily for me, I even set up an alarm which notified me that the meeting is on. So I would have even missed it because I was already in a meeting. Like at the moment, I was rounding up a meeting. So I was working and feeling there. So presently, I'm here to learn more about the practical part of auditing, taxation, and accounts. Because when you are done with ICANN, you learn the theory part. So I'm more of the practical part, the real life scenario, how all this principle and theory works. Because I just graduated 1 year ago, so I'm more experienced like that. So I hope this platform will offer the opportunity to gain more exposure to that. Thank you.
All right, we try our best to add a pound of flesh and value that we could. But beyond this platform, you will have opportunity to also reach out to me directly should you have any concern in practice or you have any area you wish to get a second opinion on. All right, who else is ready? Doreen, are you there?
Yes, I am. Good evening, sir.
Good evening there. We get to know you. Yeah.
My name is Adaiwo Doreen, a student of OAU. So I got to know KCP from Tax Club. They shared the flyer on the platform, and my hope of joining is to gain more knowledge about audit, tax, and everything that has to do with it.
Oh, that's awesome. I'm sure KCP will be coming to OAU very soon, I think next month. Nimi, are you there?
Yes, next month, sir.
Next month, okay. So some of my team will have the opportunity to meet with Doreen. Please be on the lookout for Doreen when you meet with her. Right? Yeah. All right. Who else is there? Baba Yele, are you ready?
Yes, sir.
All right. Quickly introduce yourself. Please, if you are not talking, kindly mute so that you won't be distracting. All right, go ahead, sir.
Good evening, sir. Good evening, everyone. My name is Babayale Salabi Adebola. I graduated from Lagos State Polytechnic. I work at a financial tech, which is OPay. I just came here to learn more about audit tax. And how I came across this, I saw the KCP advert through a friend WhatsApp status. So that was how I joined.
Awesome. You're very much welcome, sir. And don't forget, this same time, the last Thursday of every month, we often have this. So when you have the when you have the updates subsequently, you can also share with your other friends and colleagues who might be interested. Okay, who else? Let's take one more so that we can go to the business of the day. Oluwapelumi, would you like to take the floor?
All right, sir. Good evening, everybody.
Good evening there.
Sir, my name is Aititun Rebecca Oluwapelumi, a student of Obafemi Awolowo University, and I got the flyer and the links from our task club, AU Task Club. I am currently here to learn more about tax, audit, and other things that entails about the program. Thank you, sir.
All right, thank you very much. So without wasting time, we will go straight to the business of the day. For those whom we could not give the opportunity to express themselves, we are very sorry. We just have a limited time for this session. But we also encourage each and everyone that last Thursday of every month we meet like this to deliberate on various topical issues we must have written on in the course of the month. But please don't also just wait till this time alone. We can make the session whenever it will be coming up very engaging by going through the content we have put out in the course of the month, identify areas of concern or areas you wish to make contribution to, or areas you might want to ask for further clarity, especially for those who are already in practice. We'll encourage you to ask critical questions about maybe how what we have written relates to your job or difficulty you've been having on the job, or you also want to share some of your own perspective to the topic of each discussion. Please, if you are not talking, kindly mute so that we won't disrupt as we go on. All right, we'd like to start with the very first very common relatable topic today, which is the employees burnout. Why do I want to start with this first? Is because it's something that most people can relate with, especially myself. I've had occasions where those things of interest to me just becomes very boring or very unencouraging. To join me on this conversation today is our HR expert. She will be sharing her views on things that could call for or result in employees burnout or even individual burnout. You don't have to be an employee before you feel burnt out, and how this could be managed, what we need to do so that the burnout doesn't eventually lead to depression. I'll give the next 5 minutes to Martins to quickly share our view on this, while we'll expect that our colleagues here present, we have questions or contributions they want to make. But before I give the podium to Martins, please hold on. I see one hand up. Mutiu, do you have anything you want to say or ask? Mutiu, do you have any question you want to ask? Okay, it doesn't seem to wanting to ask anything. So, Vanessa, are you there? Are you ready?
Yes, sir. Good evening, sir. Thank you for the introduction. Good evening, everybody. This evening, I'll be talking about employee burnout and some of the causes of employee burnout. All right, so employee burnout is like a state of emotional exhaustion that can actually make somebody stressed, make somebody depressed at work, right? So employee burnout is a state of emotional exhaustion or workers, where staff or employees feel general dissatisfaction at work. You just experience or see people having this reluctant attitude towards work. And what can actually cause this? It can be maybe when a staff or a worker is actually undervalued. It can make an stressed at work. It can make an employee dissatisfied at work. Not only that, when there are too much workload for an employee or a staff, it can actually lead to employee burnout. And one other thing that can actually lead to employee burnout is employees feeling incapable of performing maybe a particular task that was actually given to them. Or let's say when an employee has less tasks to do or less job to do, this employee can actually feel left out or stressed, or let's say depressed. So those are some of the things that can actually lead to employee burnout. So employee burnout is like a specific type of workplace stress that is characterized by employees. It can be physical. You can actually see it maybe physically, it can be emotionally, it can be psychological, right? Those are some of the things that can actually make an employee feel stressed or feel tired of doing what he actually enjoyed or he or she actually enjoyed doing before. But because of there's this stress or there's this dissatisfaction, this person will just, you see that this person just feels left out or is always isolated. This can actually lead to employee burnout. So I highlighted, I don't know if we read through our write-up for this month, we actually highlighted some causes of employee burnout, and one major thing is high workload. So if an employee is actually given like excessive work to do, right, it can actually lead to burnout when the person doesn't have time for himself or herself and there are too much workload. It can actually lead to burnout. It can lead to stress or dissatisfaction. And another thing, one pressing thing that can actually lead to employee burnout is work-life balance. Let's say your work is encroaching into your personal time, or let's say during the weekend when you're supposed to be resting or when you're supposed to be enjoying having your time with your family and your friends, and works now start coming in or creeping in. It can actually lead to dissatisfaction, and at the end of the day leads to burnout. Or let's assume, let's say after work you close around 5 p.m. and after work you keep getting jobs from your team lead or your supervisors, let's say around 6:30 or 7, when you're supposed to be going home to rest. To employee burnout, you become dissatisfied, you start and all. So that's one of the major cause of employee burnout. Another thing that I'm going to say is that is the cause of employee burnout is lack of recognition. When an employee does something that needs appraisal, and at the end of the day, the supervisor or the team lead doesn't appraise such employee, it leads to employee burnout. The person becomes disgruntled or the person becomes dissatisfied. And this is the employee that actually loves his particular job or her particular job. But because at the end of person is not appraised or the person is not maybe recognized positively, it can actually lead to employee burnout. So those are some points that I want to make mention of for the causes of employee burnout.
All right, thank you there. Thank you so much. I like to put it this way. I know it's something that most people in Lagos can relate with, even if your work is not making you to feel burnout. There could be a lot of other things that could call for this. But there is a philosophy in life that you get worried about things you can control, and those ones that you cannot control, you leave it to the higher authorities. How best do you think this can be controlled?
Okay, so how best employee burnout can be controlled is, in my own opinion, is open communication. If you have somebody that you can actually speak out to or speak to when you are feeling down or when you are feeling stressed, it will actually relieve you. Like that burden on you will be a little lighter. So open communication is the best way that I feel that you can actually curb these burnouts.
All right, thank you very much. And from my opinion, before I air my opinion, I don't know whether anybody has any question they might want to ask, or especially those who had experienced this burnout of recent. Any view, if you have any question, please indicate. We give you opportunity to ask your questions or make contribution. What is the place of physical exercise as a tool to managing employee burnout?
Okay, thank you, sir. So physical exercise is one important tool that we can actually incorporate, like bring into like maybe an organization to actually help employees relax. Maybe when you are exhausted psychologically or even physically, you can actually go to maybe the gym to actually exercise, and it will calm your nerves. So exercising is one important tool that can actually help you curb these burnouts. So exercise is very important, sir.
In a corporate environment, what sort of policy or routine do you think the management could implement to help in the management of this sort of burnout?
Okay, sir. So one way the management can actually help in curbing this burnout is through partnering with health insurance companies. So we have a lot of health insurance companies like the Reliance HMO, the AXA Manzard, and all. So they have all these benefits in their plans that can actually help you. So let's say you are using the Reliance HMO, for example. They have all these maybe gym. You can actually go to the gym, the spa. You can actually go to visit the spa. It covers not only that, maybe there are other places that you can actually, there are other social amenities that you can actually enjoy from these health companies, health
insurance companies. Okay, good. But let's make it. Let's use you as a case study. Have you actually felt burnout of recent? And if you do, what have you done to managing it?
Okay, so I have absolutely. We are human, sir. So what I actually did was to speak out maybe to my colleague, because I'm close to most of my colleagues, and what I do is I pick pick up the phone maybe in my spare time and I speak to them, and maybe they counsel me most of the time, and they actually encourage me. So that's why I said one important tool that can actually help in this burnout is open communication. So if you have somebody that you can rely on, right, it will actually help you. So I have lots of people on this platform that I actually speak to, that I air my opinions to or my grievances to.
All right, so you've heard it's a regular practice by reason of her day-to-day routine. She often have exposure to people who, in the course of their work, feel burnt out. Then, beside that too, she also, as a person, also affirmed that she has experienced this before, and she has given a tip about how this could be managed. Before I let you step down, Vanessa, could this be related to students? And what sort of advice, especially where they are not enrolled on any of the health insurance scheme, could activities in school also result to student burnout this time?
Okay, yes, absolutely. Let's put it this way: as a student in school, a lot of things can actually lead to burnout. Like waking up early to go to class. Like when I was in school, there were times that I had 7 a.m. class and I have to be there on or before 7. If not, the doors will be shut, and attendance is actually very important. So all this, like, and not only that, looking for bus to go down to school, because my school, we had large crowds then. So getting bus to commute down to school was very difficult. So all these are things that can actually lead to burnout. And not only that, one other example that I can cite is maybe during exams period, where you have to do like 3 papers in a day, because of you have to read a whole lot. It can actually lead to burnout. So what you have to do, an advice that I can give, is you actually relate with people. You join social clubs. We have people from different social clubs on this platform now. So you join social clubs. You can actually maybe if you are the fun type, you can actually partake in school governance. It can actually divert your attention from all these burnout. So these are the little examples from my opinion, with my own examples from school.
All right, I'll be sharing my view also about how I've been able to manage that in the course of life and working experience. But before then, I don't know whether any of the audience who had read our content in this regard has any question, or those who are just hearing of this for the very first time but could relate with the topic, has any question or contribution they want to make. Anyone before we do the next one. So we have Bukola. Yeah, you have Bukola. Have the floor. Yes.
Okay. Good afternoon, everyone. Good afternoon, Mr. Cole. Good afternoon, Vanessa. It's nice to be here once again. So I have a question. I want to ask, how do you address internal bullying in the working environment, especially in the instance where the employee will just not speak up that he or she is being bullied, and this can cause like a burnout. So how will you address the situation? And again, so my other question is that how can we monitor and evaluate our progress in addressing all these burnouts? Take for instance, we get the solution. So how do we monitor our progress, whether I'm improving or whether it's going to affect you psychologically and emotionally and stuff like that? Thank you very much.
All right, Vanessa, would you like to address that?
Okay, sir. Thank you so much for your question, because I was trying to write it down so I do not forget. So, okay, your question is the first question was how to address internal bullying at work. Okay, number one thing to do is you develop like a policy around it against anti-bullying, right? So every organization have to lay down these policies. Okay, these are the consequences if another employee bullies somebody else, right? That is one way. Number two is to raise awareness. As an HR, you always speak about it, maybe in a monthly basis or maybe weekly basis, maybe when you're having like your early morning devotion where every staff gathers around, you actually speak about it to raise awareness. You can actually do that. You can also do that by disseminating information via emails to every staff mailbox. So raising awareness is very, very important. Then one other thing that I would suggest is, as I said earlier, to encourage open communication. This open communication is very, very important. As an HR, make sure that you are accessible to every of your staff, right? Make sure you're accessible. Make sure they can actually walk up to you to tell you personal things. Is very, very important. So you should encourage that. You should encourage open communication with your team members. Another thing that I will say is that's the last thing I'm going to say, so I don't take much of our time. You should actually lead by example. As an HR, don't say because you have the upper hand, or because you are the team lead, I can do whatever I like, or I can say whatever I like to my colleagues or to my team members, right? It doesn't work that way. So you should actually lead by example. Do not be harsh towards them. Do not speak authoritatively. Do not entertain don't be a bully, so other people too would not be bullied. They will not copy you. All right, I don't know if I've answered your question, but for number two, you said how do I monitor my progress after employee burnout? So what I'm going to say is you should set a clear goal, right? I said what can actually lead to employee burnout is maybe high workload. I mentioned a lot of things earlier. So what you have to do is set SMART goals that are specific, measurable, achievable, relevant, and time bound, so that you don't feel overwhelmed. Because if you are overwhelmed with work, it can actually lead to burnout. So just set SMART goals. There are some of my colleagues that whenever they come to work, they have their to-dos for today. I see a lot of people with journals. They've outlined their to-dos for today, for the day, so that it doesn't become overwhelming for them. So that what they're supposed to do that is actually urgent, they do it. And what they think that, I can do this tomorrow, they put it as for tomorrow to-dos. I don't know if you get my point. So let your goals for regarding work be SMART. What I'm going to say is, another thing I'm going to say is regular self-care. Regular self-care is very important. As I said earlier, like maybe visiting the spa, going to the gym, is actually help you to monitor your progress. What again is seek feedback.
Let's hold it there. Thank you so much. Trying to manage the time so that we'll be able to spread the discussion across other areas. We'll still be doing the wrap-up session at the end of it, where more opportunity will be given for others to ask in their questions, and my view will also be shared. So on the next of our discussion for today is taxation. In the course of the week or month, so to say, we had written on understanding tax loopholes in strategic tax planning. What does this mean, or what does this shenanigans mean? When you say tax loopholes, what is tax itself? Well, you will agree with me that tax in its very simplified way is compulsory payment you have to make to the government based on incomes or profit that you have earned. If that should be the case, what actually gives rise to tax being a compulsory payment is because it is backed up with a statutory legislation or statute, so to say. That's being so. That means that from time to time, if you look at the statute or the laws very well, it will definitely give clear guidelines on what should be taxable and what should not be taxable. It should also give clear guidelines on what sort of incentive you could explore. So in the light of that, for you to do proper strategic tax planning, you need to understand what are the incentives in the tax law. But to put much more light to this, my colleague, Amzat by name, will be doing further clarity to that. Amzat, are you there?
Yes, I'm there, sir.
All right. So can you enlighten our audience more on what the topic of the month is, drawing from the introduction I've given?
Yeah, thank you very much, sir. So to start, it is important for us to know that tax has existed since time immemorial, dated as far back as 3000 BC, that's before Christ. And one thing that hasn't changed from that period to now is that tax is as important to government as oxygen is to we humans. So therefore, the government don't take tax matters with levity. So, however, within the realm of taxation lies a complex network of regulations. And these regulations and laws might be complex for taxpayers to understand at times. So this will bring us to our discussion today, which will be exploiting tax loopholes by understanding what tax planning is. Without further ado, so I'll explain what tax planning is.
Yeah, let me hold you there. So put guidance to what we are discussing in a very simplified way, not being very too technical. When you say you are doing tax planning, what does it mean?
So tax planning is the analysis and the arrangement of a person or an entity's finance in such a way that it maximizes, in such a way that the individual or the company maximize tax reliefs and minimize tax liabilities. So
okay, so with that now, let's assume myself as an individual, I want to do a tax planning and I've approached you as my tax consultant, right?
Yes.
How or what sort of advice will you give to me?
So as an individual, so tax planning can be done as an individual and as an entity. So as an individual, it is important for you to, but both ways, it's important for you to know the allowances, the reliefs, and the allowances and reliefs that you enjoy as an individual. So definitely you need to understand, you need to have a good understanding of the tax laws and regulation. So for instance, as an individual, you are entitled to, from your personal income tax, you're entitled to consolidated relief allowance, which is 20% of your salary plus whichever is greater between 200,000 and 1% of your salary. And to also reduce your tax, your personal income tax as an individual, you are allowed to deduct statutory allocations like pension, NHF, and NHIs. So that's for an individual. And as a company, for your company income tax, you are allowed certain allowances. Like
don't let us get to the company first of all. I want proper understanding to be obtained from this. It is important for everybody to note that you can do tax planning for an individual. You can also do tax planning for an incorporated entity. But let's look at the perspective of an individual first. You need to have a fair understanding of is that person you are consulting for actually taxable? So if the person has earned incomes or had profits that is exposed or likely to be exposed to tax, then the next question will then have to be, what sort of tax is that income or activity of that person exposed to, right? Because remember I said at the very beginning of this particular session that tax is a compulsory payment, and what makes it compulsory is the legislation. So any planning you are doing must not be a contravention to what the law legitimately allows. So you need to understand what taxes is, what taxes is the person exposed to, what are the appropriate tax legislation applicable on that very form of tax. Then look at those legislation. What are the loopholes within that legislation to be sure that you can orchestrate the activities of that person such that maximum benefit can be derived from those incentives. The fact that we are doing tax planning or a client's request of us to plan their taxes doesn't mean we should be indulged in any activity that will result to evasion of taxes, right? But what the whole idea about this is we are looking critically into what does the tax law says, what incentives has the law given. How can I orchestrate my activities such that I will legitimately benefit from those loopholes? I hope that is taken. Without mentioning name, Amzat, would you give us an instance of how this has been applied in the course of your work? You don't have to mention the names of the client. Just give us an illustration of the sort of planning that you have done for an individual to aid that sort of planning. Is Biodun here?
Okay, yes,
Yeah, Biodun, would you mind trying to step into that boat for Amzat? Yeah.
Good evening, everyone.
Yeah, good evening.
Okay, what sort of tax planning did for our client was earlier this year before the signing of the Finance Act 2023? Everybody will agree with me that there was a part of the Finance Act that now disallowed any investment allowance of vehicles bought on or before the effective date of the Finance Act. So with this, we were able to strategically help our clients in purchasing any fixed asset they want to purchase, on which they are expected to enjoy investment allowance on or before the effective date of this Finance Act. So by so doing, this has enabled our clients, this has enabled them, giving them the opportunity to be able to enjoy investment allowance on those assets purchased on or before the effective date of this Finance Act.
All right. So Biodu has cited an instance of how planning could be done or what they have done in the light of incorporated entity, right? But to bring this down for the benefit of those who might not be so involved in taxes is just the same way we plan our lives, the same way we plan our activities, we can also plan our exposure to taxes, right? For those who are still in school, the very first point of reference in doing this planning is you must know the tax exposure. So in the light of what Biodu has referenced, that client may potentially have exposure to company income taxes. And the relevant legislation on company income taxes is the Company Income Tax Act. In that act, it recognizes that you can claim certain incentive, right? They have looked at those activities of the company and identify cogent areas where they can capitalize on without necessarily falsifying books. The fact that you are planning doesn't mean you should falsify books, right? You will need to take that into consideration. But plan to ensure that you identify opportunities within the law that legitimately you can program your activities around and have your tax minimized. The whole essence of tax planning is to potentially reduce likely tax exposure, right? So you need to take cognizance of that. This session will not avail us all the opportunity or the time to look into nitty-gritty of these areas. But what we can gain from this section is to identify that as accountants or tax consultants, we are not just to compute what tax to be paid and file returns, but you can also meaningfully engage in strategic planning for your client. So when we say strategic planning, right, you need to identify what are the intention of the organization for a defined period, right? And how you can help them to actually achieve those strategic intents without necessarily being exposed to taxes that could have been avoided. Biodun, would you like to give us any other example in addition to the one you've given earlier on about potential area, not necessarily what you've done, but potential area that our listeners can pay attention to and leverage on that should they have exposure to that in that regard in future? Beardo, are you there?
So I would like to comment there.
Okay, good. You can have the floor.
Another aspect of tax planning we do advise our clients is most companies, when they want to make provision for donation, when they want to make donations in their financial statements, they make donations to unapproved bodies, and in the calculation of the tax liability at the end of the year, it is usually disallowable. So we advise most of our clients, all our clients, to make donations to only approved bodies, such as the Nigerian Boy Scouts, the National Library, and the Nigerian Museum. So you can find other agencies where you can make these donations, these allowed donations, in the 5th schedule of the CIT Act.
All right, a very, very good contribution you have made, and to put a much more top level guidance to that. If you happens to be a consultant to an organization that expects donations from other entities, but their name is not actually enlisted in the reference schedule, the sort of planning you could do for that kind of organization is to have their names actually enlisted. There are procedures around doing that. You need to definitely identify clearly what they are doing as being of such organization that its activity actually looks like or qualifies for such such donation. For example, the intent of the law is to give donations to organizations that are after the welfare of their members. So if the registration clause or the business clause of that organization is to offer similar service, definitely they can have their name enlisted on that very schedule. FIRS Act has provisions around getting that rectified. So I think we should take notes. Should you have a client who has always been beneficiary of various donations, but those who have been donating to them have been at a disadvantage because they could not validly get that as a deductible deductible expenses. So such kind of organization can have their names enlisted. Do you want to say something? Are you there?
Yes, I'm just there. So when additional thing I want to add is the area of finance cost. The finance law, the tax law actually stand against any finance cost or loan from companies not registered in Nigeria, from non-resident companies. So as a company, you can only be allowed to the tune of 30% of the earning before depreciation, amortization, and tax. So now, as a company, as a form of tax planning, we always ensure that our clients strategically make sure that any loans they are acquiring are being acquired from companies from companies within the jurisdiction of Nigeria. And even if at all you are applying loans for companies outside Nigeria, we ensure that you don't go outside the 30% of their earnings before interest, tax, and depreciation, so that the finance cost on this loan can be allowed for tax purpose. And even if the finance cost on this loan is only allowed to the tune of 30% of their earnings before depreciation, tax, and interest, we ensure that we keep track of this finance cost so that our clients can enjoy the benefits of allowing them for future profits also.
Okay, very important point you have also made. Let me put that into more clarity. You will agree with me that many a time businesses or companies take loan to facilitate their various business activities. And when you are taking this loan, you can approach a financial institution to giving you that loan. Say, for example, you have a company in Nigeria, ABC, and ABC had decided to approach Guaranty Trust Bank for a loan. And Guaranty Trust Bank haven't given the loan, charge interest on that loan. So what she is saying is that within the ambit of our tax law, because the provider of that loan is in Nigeria, and that company that also benefited from the loan is also in Nigeria, and the money that have been borrowed has been used for business purpose, that sort of loan, the finance cost on it will be an allowable expenses. But there is another tweak to that. Organization in a particular tax jurisdiction who decide, for reasons best known to them, get loan from another institution outside their jurisdiction. So when that happens, then some of these provisions could be applied, but I will explain within the ambit of the time we have. When you are taking a loan from any other institution outside the jurisdictions where you are operating, right? Let's use the same entity. ABC operating in Nigeria has taken a facility from, let's say, XYZ, which is domiciled in Ghana, right? So the question FRS will want to ask is that, is there any relationship between ABC in Nigeria and XYZ in Ghana? If there is a relationship between them, right? Meaning that maybe they are under common shareholding, or they have a kind of a related party structure. What the intent of the law is saying is that interest component may not likely be at arm's length, right? And Schedule 7 of the Company Income Tax Act addresses that. So what it says is you need to identify what is the interest component I'm paying in a particular period, right? What is the EBITDA, earnings before interest, tax, depreciation and amortization that particular company that took that loan has in that particular year. So the maximum interest that can be allowed in that particular year will be capped at 30% of that EBITDA. Let's put illustration to that numbers. Let's assume when I took the loan, the interest on that loan is 1 million naira. If the 30% on my own profits, earning before interest and tax and amortization, if the 30% on it is say 300,000 naira, you can see that 300,000 naira is less than the interest that I want to pay. What that section of the law is saying that is that I can only claim as much as 300, while I will keep in track that I still have 700 that have not been claimed. That will be taken or deferred to the subsequent period. So the point Biodun is making is you need to keep track of that where that applies to you, right? Such that in the subsequent tax year you can then utilize those reliefs. But the strategic planning you could have done from the very beginning is to identify, will it be more beneficial for that kind of company to have taken a loan from a non-related party or a related party? If they are taking a loan from the same sort of loan from a non-related party, what will there have been the advantage? The advantage will most likely be that they will have had reason to claiming more of all of those expenses that they have incurred on the finance cost, as opposed to when they are taking that sort of facility from a related party, right? But like I said, we can, within the limit of the time available for this session, address all the concerns. So I encourage you, read the content that we have put out, right? Should you have any questions in the course of your work, on the course of your personal study, then you can engage us much more. But we are taking time out to identify areas that you can definitely grow competence on, and that could be to your advantage. All right, please, I will still expect questions. If anyone asks questions, please on this area kindly indicate before we move to the next area. Any question on this? Do you understand what we mean by... Okay, somebody has a question. Bukola, have the floor.
Okay, thank you very much for the opportunity. So I have two questions actually. So the first one is that I want to know if there are tax loopholes for income taxes, and for the second question, so I want to know if tax avoidance and tax loopholes are the same thing. So if they're the same thing, are there some anti-avoidance laws that are designed to like prevent taxpayers from making use of these loopholes? Because I know it's legal, it's kind of legal, but still, we know the federal government, they don't really want us to make use of this since it will still be a detriment on their part. I want to know if there are some anti-avoidance rules that are designed to prevent taxpayers from making use of these loopholes. So thank you. Those are my questions.
All right, Amzat, would you like to address those questions? Okay, Biodun want to take it. Biodun, have the floor.
Okay, so the second question is first tax avoidance is actually making use of those loopholes. So tax loopholes, first of all, are those laws, are those part of the tax laws that as a taxpayer you can use to your advantage. For instance, now, after 2019 classified companies, we have companies whose revenue is below 25 billion. They are taxed at 0%. Now, me as a taxpayer, that means if my revenue is below 25 billion, I'm technically not paying CIT, so I must file my returns. So those are tax loopholes that the company you can maximize. So the process of maximizing those tax loopholes in minimizing your tax liability is the tax avoidance technique. Okay. Then to the first question, I don't think I got the first question.
Yeah, so the question is that are there tax loopholes for income taxes? Or is it just for corporate? Yes. Okay.
Yes, there are tax loopholes for income taxes. But first of all, I want to say that income taxes is classified into two. We have the corporate income taxes and the personal income taxes. So the corporate income taxes is the CIT that we'll be talking about this morning, and also the personal income taxes, the CIT. income or impacts on incomes of individuals. And I think Cole mentioned one or two loopholes, and I think Amdat also mentioned one or two loopholes that you can maximize. There is the CRA allowance that is being granted to taxpayer. Also, as a taxpayer, you have the opportunity to using your pension, NHL, and other statutory deduction that has been made on your salary as a relief to the tax you are expected to pay. So for CIT, we have the capital allowance. The capital allowance are incentives that are given for income taxes. We are also given the opportunity to be able to claim any losses that has not been relieved on your any losses that have been carried forward from prior years. So these are tax loopholes that as a company you can maximize to reduce your tax liability. Is that it?
Thank you very much, Chukima. If you have other questions, I will ask after the session.
Yeah, thank you so much. I would like to add a little to that because it's a very critical question she has asked, and it could also be an interview question. So just imagine that you are in an interview and your interviewer asks you that as an accountant who also have tax responsibility, what are the loopholes in the tax laws for an individual? The best way to answer that is this. Within the Nigerian context, there are very limited incentive or loopholes for taxation of individual, right? But the common ones that we can always relate with is what we call the consolidated relief allowance, right? We also have the pension contributions, right? We used to have, without any objection, NHF, but this has now been made optional. So one of the aggressive nature actions that anybody could have taken is, with respect to your pension contribution, we know it is capped at 8% of the basic housing and transport. So if an individual now says, I want to do beyond the 8%, it is technically allowed, but there are conditions that must be fulfilled. And that contribution that you are making in addition to the base must also be reasonable. You can't be saying that, you want to take advantage of these loopholes within the tax law, but you want to now, by reason of that, contribute over 50% or over 30% of your income as that because you want to evade tax. That will be seen as being very aggressive, right? You could also have an individual, maybe a self-employed person, whose income is totally exposed to PIT, as the case may be. The person has not been doing or complying with pension contribution and the likes. You can encourage such person that, if you have the whole of your income exposed to tax because you are not taking advantage of any of the relief, but you could have that same exposure reduced if you have taken advantage of the pension, NHF, as the case may be, in addition to the consolidated relief allowance. There are some other ones if you have taken a life policy assurance policy, that could also be a legitimate deductions to reducing your exposure. But all of that must pass reasonability test. I believe that addresses put more clarity to that very question. Bob, can we quickly have your view before we move to the next area? Bobby Mike, you have the floor, please. Oh, okay. Maybe when he's ready, then we can take his question. All right. Are you ready now?
Hello?
Okay, good.
Yes, can you hear me?
Yeah, very well. We can hear you.
Yes, good evening, everyone. Thank you for the privilege. My question is precise and short. I'd like to know the effect of multiple taxation on small businesses in Nigeria.
Okay, the effect of multiple taxation on small business in Nigeria is it kills the business, not only in Nigeria or in any other part of the world. Whether you're a small company or you're a big company, when you are multiply taxed, you'll be discouraged to continue what you're doing. You will have no reason to be motivated to continue in that business activity. It kills business much more than one could imagine. But the best way to managing that is, if you can, get a consultant to help you structure your process and also engage with the tax authority such that those likely activities or the way you have structured your process could be better managed to avoiding those exposure to those multiple taxes.
All right, thank you.
Yeah. But if you have a particular business in mind, or you have a more practical case in mind, you can put it up without mentioning name. We'll give you an insight to some of the structures you can put around that. Do you have anyone in mind?
Yes, there is one I am running at the moment, but the taxes that have been levied on them seems to slow the businesses down, and that's why I had to ask the question that multiple taxation, there's a way it plays on the businesses in Nigeria. It doesn't give room for the businesses that we do here to thrive.
True.
You understand? Yes. So
I totally agree. Okay, so what we can do,
it's really killing the businesses that we have around Nigeria.
Okay, what I can do because of time is I'll give my number. You give me a call after this session, right?
Okay.
Explain in details what concern you've had, right? We can help you put a structure around that without any charge, right? And that would be a kind of encouragement for you for having taken time out to attend in this session.
Oh, thank you so much. I'm really looking forward to having your number. And this is very expository. I've gained a lot. Thank you so much.
Thank you very much. Thank you so much.
You're welcome.
All right. I believe all those questions for now on taxation and the other area we've taken has been addressed. Please keep your question coming through if you have any other one. And we've also stressed this fact that the essence for this section is for us as business owners or managers or even practitioners in practice is to expose us to those areas probably that we have not paid attention to, where we can then make more research around it and better structure our process to ensure that we can promote the going concern of our business, right? And for those doing the regular 9 to 5, acquiring more of these skills make you much more employable and add value to your employer. So make the best opportunity around this. Then don't always just wait till the last Thursday. If you have anything burning within you about practice generally, you can put question across. And you can also make meaningful engagements with some of this content. And if you have any other areas that you feel that, it's more important to you, you want us to discuss around it, of course, you put that forward. We will do a programming around that. Oni Ayomide, quickly make your view known in the next 2 minutes before we go to the next area.
Okay. Can you guys hear?
Yeah, we can hear you. Go ahead.
Okay. Good afternoon. My name is Oni Emre, as we saw. I would actually like to bring on the floor there was a video that circulated to those that really watch financial content. this is about large scale businesses. The whole video that as a large scale business that has shares, you can not liquidate your revenue or your shares. Then so that government will not be able to tax. I don't know if it applies in Nigeria or if it's actually correct at all. So that government would not take taxes on those shares. Then they wait for it to liquidate it because it was income earned but not actually liquidated. Then instead of it to liquidate, you now borrow loan again because they can't actually tax your loan, like you said, especially if it's a bank in Nigeria. So does that work? Does that actually work at all in Nigeria sector?
Yeah, absolutely. I don't know where you are calling. Where are you joining us from?
I'm actually joining from Nigeria, but I also double in all those other aspects of finances, of course.
Okay, so I want to know how to address your concern very well. Okay, some part of it works in Nigeria. There is a provision that says that if you buy a business, right, if you take over a business during that very period that you have the business take over, likely exposure that will have been in terms of capital gain on that particular takeover is exempt from being taxable, provided that you don't in a short while, 12 months, also resell that process again. Right, so it's actually to an extent applicable in Nigeria. The whole essence of that is to ensure that we have business keep on striving. That's one. Two, we're able, as opposed to closing down businesses, we're able to through that very acquisition create more employment opportunities within the Nigerian market, right? And by and large contributes to the GDP of the country. That's why those legislations are there, but they have to be strictly followed. You have to ensure that you meet all the conditions, and in the event that you violate any of those conditions, all the reliefs or exemption given will then be lost, right? So that is on that. So quickly we'll be going to the next area among what we have for discussion today. This time we'll be talking about auditing. Auditing is one of the very key areas of practice, and for those who don't have understanding about this before, let me just lay background around that. In Nigeria, it is expected that, not just Nigeria, but most countries, it's expected that the interest of shareholders in the business or owners of that business must be protected. And that is encouraged by stewardship accounting, right? Especially if you are the owner of the business, but you are not the one managing the business on day-to-day basis, right? So whoever that you have put in care of the business must render an account of what they have made with what you have put in their care, right? But the intent of this provision is not just to protect the owners of the business alone, but all potential stakeholders in the business. You have engagements with banks, so banks directly or indirectly, their interest should be protected. You buy things on credit from people, your creditors' interest should be protected. You have people who are also engaging you on day-to-day basis as customers. They want to be double sure that they can continue to have that sort of service on regular basis. So that and many more are reasons why the financial process of organization is expected to be independently verified. In addition to what the management, whether owner manage or third party manage business, in addition to what they have given as a report, we expect that that report should be independently verified. Those who do that are called auditors. In the course of auditors doing their work, their processes are guided by various standards. The same way you have lawyers, when they have any prayers in court or any case in court, they won't just go to the court and say, oh, can you just discharge and acquit my clients? No, you have to give reference to, making reference to various sections of the law why you think the allegation brought upon your client is not valid. Same way for accountants. When accountants are preparing their financial statement, they make reference to what we call the accounting standards. So what does the auditors make reference to? Make reference to what we call the auditing standard. Today, we are picking one of the numerous audit standards, which we call ISA 320. ISA 320. ISA is International Standards on Audit, right? So there are many of those standards, but the one we'll be looking at today is on ISA 320. ISA 320 speaks to what we call audit materiality in planning and performing an audit. What does that mean? That is, when an auditor wants to audit a financial statement, they must be sure that they are devoting attention to areas that are germane, right? One could say, in a literary sense, a substitute for materiality is what is very important or germane. So they want to be double sure that they are devoting attention to those areas that are germane, right? But how to determine what is material or otherwise is actually guided by what we call, the standard which we call ISA 320. Joining us to speaking on this will be Esther Wichi and Toluwanimi Makinde. Toluwanimi, please, would you like to give us just a very brief intro into what ISA 320 is about before Esther will then give a complimentary note to that?
All right, sir. Good evening, everybody. So, like Cole rightly said earlier, ISA 320 is talking about the audit materiality in planning and performing an audit. And there's one thing I would like us to bear in mind. Most of the time, when an auditor is performing an audit engagement, usually there's something we always say based on auditor's judgment, right? So materiality is a very important aspect of the audit because it can, in quote, make or break whatever opinion you're going to be giving on the financial statement. And you might ask that, what is materiality? Materiality is basically, but let me say what if you are considering what is material in the first place. That means you're looking at, is there any information, any disclosure, whatever it is that might affect the decision making of whoever will be doing the financial statement. So when you're not considering materiality in itself, this is something that is usually done at the beginning, during the audit, and even at the end of the audit, because this will also help in the auditor making his final opinion or forming an opinion on the financial statement that is going to be auditing. I think I will just pause here for now so that I don't take the whole of the...
All right. Thank you, Toluwanimi. Thank you so much. So the point we are trying to make is that as auditors, we want to devote attention to areas that are very germane in the audit process. We want to be double sure that even those other smaller bits of the audit process or the financial statements that can be cumulated, that when cumulated, that our material has also paid attention to. But this idea of the whole of materiality, let's bring it home for those who are not core accountants amongst us. How do you feel as an individual in your level now, if you misplace the sum of 100 naira, will you let everyone lose? Possibly no. But if you misplace the sum of, let's say for a student, 50K, it becomes worrisome. So the same way, if you look at it in business, if you misrepresent certain values in your financials statements, where you have make sales, let's say you have made a sales of 100 million, but you have reported this less or much more than it ought to be. That differential, how significant is it? In which way will it affect the decision of those who will have the stakeholders will have made about your financial statement? That is what materiality is trying to address, right? But the value that this standard has brought to being is, how then do we ascertain what is material and what is non-material? It gives guidance to auditor. This is how you should identify what is material, and this is how you should identify what is non-material. For the purpose of this standard, it identified the following sort of businesses. It identified what we call profit-oriented business. How do you identify materiality in that area? It also identifies businesses that are not for profit making, or possibly they are government establishments, right? I would like Esther to give us an explanation of what we mean by overall materiality and performance materiality. Is Esther there?
Yes. Good evening, sir. Good evening, everyone.
Hold on, Esther. I saw a hand up. Is it an error, or the person want to ask a question? Okay, go ahead. I think it's an error.
Okay, overall materiality, it's also known as financial. It's also known as materiality for financial statement as a whole. The overall materiality for the financial statement as a whole can be seen as the highest amount of information that, if omitted, misstated, or not disclosed, then such information has the potential to affect the economic decisions of users of the financial statements.
All right, so
for example,
don't worry, let me help you to breaking this down. When you say overall materiality, what we are trying to say is that, looking at the financial statement as a whole, what is the threshold of transactions that, if we omit or we misrepresent or we make an error about, that could affect the financial statement or the value that financial statement is expected to portray or add. But one canon that auditors work with is
Just few minutes. The network will be back up. Okay, I think pending when Hope joins us, but I think he was talking about the overall materiality and the performance materiality. So if you're looking at the financial statement as a whole, right, and we are considering what is material or what is not material to the auditor in the case of the auditor engagement, and they're not looking at the financial statement, not looking at maybe an assertion in itself, or maybe a specific transaction. That is what we call the overall materiality. And when I say assertions, these are assets, liabilities, income, expenses, equity, right, that the management has already presented in their financial statements that was given to the auditor, or rather presented to the auditor. So looking at everything as a whole is what the overall maturity covers. So now when you're not looking at performance maturity, you're not putting a threshold for your audit engagement. You are saying that, okay, now that I've seen and I've understood the process of this particular business, what do I want to limit myself to in a sense, considering the industry that the company operates in, considering the users of the financial statement, right? In a case where we have, let's say, stakeholders or a public company that is quoted or listed, understand that the retained earnings, things that relate to the shareholders, are usually more important in that kind of case. So you would have to be careful not to just discard some information or go overboard with the threshold you're going to be setting in that kind of case. So it's always important to understand the industry, the process, and the business activity of the company itself that you are auditing in that case.
All right, let me thank you very much for holding on for me. Yes, so she has explained to you the overall materiality. If you pick the audit standard or identifying yourself as an auditor, you must know that, for me to act as an auditor, my activities on day-to-day basis must be regulated by what we call ISA, right? And ISA addresses various areas of the audit process. One of the areas is what we have picked on today, which we tag materiality, right? The standard helps us to identify what is overall materiality, right? What is performance materiality, right? And what is specific materiality. Nimi, since you have started, let me continue with you. Can you then help to differentiate between those three sets of materiality? Overall materiality as distinct from performance materiality and as distinct from specific materiality.
Okay, sir. In my own opinion, I would say that, like I was saying earlier, performance maturity helps with setting the initial threshold for, maybe not the initial, the threshold for what work you want to do on the audit engagement that you are carrying out. This will help you to assess the risk of material misstatement and also help you to determine what audit procedures you have to put in place during the audit engagement. And I was also saying that you have to be careful also to be sure or rather ascertain the user for the financial statement. Because these are some of the factors that will help in determining what performance materiality will be using. But if you're looking at specific materiality, now we are now going into details. You can be looking at, let's say, some attractions and determining what materiality you want to use for, say, we're looking at receivables now, not just generally. We're looking at receivables in itself that under the asset part of the financial system, let us see receivables. This is a very material aspect of the business. You can set specific materiality to that receivable in itself that might be different from every other materiality that we are using, or materiality level rather, that we are using for other parts of the financial statement. So we have to understand the business. I feel like business
of the company is very important so that we don't just use general generic materiality, and at the end of the day we end up giving wrong opinion or having audit risk in a sense.
Okay, thank you, Nimi. I understand some of the audience here may not be core auditors or accountants, so let's help them to bring this home, right? overall materiality, look at this as though you have your safe in your house, right? And if somebody comes in there, what is the maximum amount that, if stolen or misused, you will frown at, right? One can say, if I have an amount in my safe and somebody takes 50,000 without my authority, it becomes worrisome. That could be the overall materiality, right? So, but explaining performance materiality, what if the person understand that, oh, this person, if I steal 50,000, they will, he or she might frown with it. But what if I'm stealing the money small? Instead of picking 50,000 at a go, I decide to pick 20,000 and I'm making the stealing in 20,000 in 20. So performance materiality helps you to bring that threshold down a little bit. What if that error occurs in a smaller bit below what you had earlier emphasized as your overall materiality? Will it still lead to us having a financial statement that will misrepresent the actual outlook? Of course, yes. Right? Then we have another one, which is called the specific materiality. Specific materiality then means that there are certain components of the financial statements that your overall materiality may not work for because of the volume or that transaction. Say, for example, you have a company that is into sales of that is in a real estate, and most of their assets are in huge sum, and they have so many of those assets. So if you have set your overall materiality at 500,000 and the assets are so much, it then means that you will likely be doing vouching on all the assets, because most of the assets may likely have a value above 500,000. Because the essence of your materiality is it gives you a base. Anything above that base, you must perform all your audit process on it to the latter, right? So because of the peculiar nature of that very transactions, as you may identify during an audit, you might then decide to calculate a specific materiality or a particular materiality for that line of transactions or item of the account alone. That is what we call specific materiality. Please, I'm sorry, time will not avail us to look into nitty-gritty of all of these standards, but we've been able to identify that this standard generally is very key. If you want to be a good auditor, you must not just know your debit and credit. You are also expected to know your auditing standards and your accounting standards to the latter. We've been able to identify one today, and I will encourage you that if you have missed our content on that topic, please go back to it and read it. Should you have any question, feel free to reach out to us. But if you have not read it before, at least we've been able to give you a pointer why you need to pay due attention to that. I saw somebody's hands up before we take the last aspect of what we had for today. Kelvin, I think you have a question, do you?
Yes, good evening, everyone.
Good evening, my brother.
Okay, sir, my question is, for a situation whereby you're going for an audit, and is it possible to have materiality for different line items, like what might be material in terms of cost for the company might not be the same as the materiality for sales? Is it possible to have different materiality for each item like that and see the financial finish?
Okay, if you had attended some of I think the very last section we had before this very one, we had identified the needs to understanding your client and its environment. Because before you set this materiality, you must have understood who your client is, what are the peculiar risks that is open to that client's business. It is your understanding of the client's industry, the nature of its activity, its processes, and the potential risks that you put all together to determine how you calculate that materiality. Time will not permit us to teach you how to calculating that. Maybe, I don't know whether we could create a much more practical sections for that so that people can see. But to address your particular question, you will have put all of those likely differentials together in determining a particular materiality threshold that will be applicable to all the sections of the account, all the elements of the account. Whether you are referring to the assets, you are referring to the expenses, revenue, and the likes. But remember, we had also stressed that there are times in the course of, by your understanding of that client's process, even though you have decided to put up a particular materiality, which we call the overall, and you have even watered it down, which we call this performance materiality, there may still be certain elements of the account that materiality that you have set will not address its own peculiarity. In that instance, set up what we call specific materiality to address the peculiarity of that section of the account. Kelvin, does that address your question, please?
Yes, very much. Thank you very much.
All right, thank you very much. But please don't forget that all the process to ascertaining this materiality must be documented, right? ISA 320 expects you that you don't just determine this materiality, you must put together and document everything and factors that you have considered in determining this materiality. All this altogether forms what we call your audit work paper, right? It must be well documented. I think another person has a question. Felicia, you have the floor if you still have the question, or has it been addressed?
Okay. Good evening, all.
Yeah, good evening there.
My question is on the materiality.
Okay.
Can you please define materiality as a word in audit? And also, what are the audit process in ascertaining materiality?
All right. Now, what gave rise to materiality? Why do we even talk about materiality at all in auditing? The whole essence is that it's because of because of the responsibility that ISA 200 places on auditors. ISA 200 is that audit standard that expects auditors that anytime you go to audit or you go on audit, at the end of the day, you must be able to express an opinion about how fairly presented that financial statement has been. If the financial statement has not been well presented, that the disclosures and presentation therein were in violations with what the accounting standard has provided, make recommendation to the management, let them correct those things, and if they agree to the correction, you verify that the correction has been made and you issue your unqualified opinion. But there are times in the course of the audit that you observe that you identify certain differences which you have basis for your query on it, but the management may not agree with you, right? If the management did not agree with you, they may have a contrary opinion, and it happens on many occasions in practice. You say this is your view, and they say no, they are not agreeing to it. They have a contrary view. Now, because this is a very germane case, this is one of the many reasons why we make reference to materiality. You as the auditor will now ask yourself, what is the impact if this management decide to go ahead with this their opinion, and that corrections will not change, what will be the impact on the user of the account? Will it eventually lead to the user of the account making wrong decisions? Will it eventually making them make a decision that ordinarily, if things were in order, they would not have made those decisions? That is the whole idea about materiality. What could put you off balance, right? If things had been how it should be, right, you will have been able to fairly state that, okay, this organization is doing well. Let me give you an instance. An organization is into the business of they are rendering, let's say, engineering services, right? And they have certain contract they have gone into. They've not performed all that is expected of them. In that very year, the contract price of that particular contract, I mean, the whole of the contract they have taken in that particular year, let's say, is 15 billion. And the management has reported the whole of the 15 billion as a revenue. You as the auditor, you have an understanding of what IFRS 15 has said, and you identify that they've not fulfilled all of their performance obligation. Why should they now recognize all the 15 billion as revenue? It's wrong. And you make recommendation that, oh, I think it's only about 60% of this revenue that should be that should be reported as revenue based on your understanding of what they have done. But they decide not to agree with you that no, they are not doing anything less than that 15 billion. You will then have to look at it. What is the 60% of that 15 billion? And in comparison with what they have made, do you think it will be very significant? Of course, it will be very significant, because whoever that is now looking at their financial is seeing them as being 15 billion richer. Meanwhile, they have not fulfilled that condition. It's possible that there are caveats in the contract that contract, if not completed within the defined period, they will be expected to refund the whole money. Meanwhile, they have reported the whole money. So these are issues that brings about what is material and what is not material. Now, to address your second question about what are the process to you determining what is materiality and all that, you need to have a fair understanding of what that business of the client is. You need to understand the industry practice. You need to understand if it is a business that is regulated, what is the provisions and expectations of the regulator, right? You need to understand the place of the accounting standard that impact on their processes. You need to understand what is the effect of wrong reporting, the effect that wrong reporting could have if those things were not addressed. All of these are all the things you will put together in establishing what will be the percentage of your materiality benchmarks that you will consider. Remember, I said it before, that you need to understand, is it a profit-oriented company or a non-profit-oriented company? If it is a profit-oriented company, then our materiality will be calculated as certain percentage of the profit after tax or before tax, as the case may be, right? If it is a company that is not profit-oriented, they are highly dependent on donations, then the materiality will be certain percentage of the grants or the donations that people will have made to them. If it's a company that is highly capital intensive, right, then the percentage of that materiality will be tied to their assets, right? So those are the things that you need to consider for you to be able to ascertain what are the appropriate rates that will be established as the materiality and how you even determine that percentage that we are applying, as the case may be. Felicia, I don't know whether we've been able to address your question.
Yes, sir.
Thank you. Any other question on this before we use the next few minutes to wrap up today's section? Any other question? Kelvin?
Okay, sir. While you were discussing, you said something about a non-profit making organization making a materiality of a percentage of their.
Captain, I'm struggling to hearing you. Do you mind speaking a little louder?
Can you hear me now, sir?
Yeah, much better there.
Like I said, when you were talking, you said something about non-for-profit making organization setting the materiality of a percentage of their donation or grant. So it came to my mind and I wanted to ask, is it possible? Of course, a non-profit making organization at times, they are more of incurring costs. So is this possible for them to take a percentage of their cost as materiality, because they would much more want to cater on their cost, like reducing their cost or all of that?
Okay, so the appropriate answer to that, or what you should consider, is the germane risk to an organization who is a non-profit making organization is most likely tied to their inflow. Because if they don't have that grant, they will definitely not be able to incur the costs or carry out all those their welfare or NGO activities. If they had their revenue and they understated the revenue, the extent to which they will have made impact on their activities will be impacted. That is why if you look at organizations that sponsor NGO activities, they do what we call value for money audits. The whole idea about that is that they want to benchmark what value, what donation they have given to them vis-a-vis what they've been able to accomplish with it. Not what they have accomplished vis-a-vis what they have given to them, is the other way around. So because of that, that revenue is the most potential areas that could most likely be manipulated. Somebody could be given a grant of 100 billion and reported 100,000 and use that 100,000 to carry out various activities within it. So if you benchmark your materiality on the costs, then you are forfeiting the most important area that will have exposed the errors or misstatements that could have occurred in the affairs of that organization. Do you understand me?
Yes, very clear, sir.
All right.
Thank you very much, sir.
So within the next few minutes, we'll just quickly take the last aspect, which is relating to financial reporting. We'll be wrapping up in the next few minutes. Today, this month we had written about benchmarking financial reporting, financial accounting with what we call forensic accounting. What is the difference between the two? How are they related? What is the perspective about this? So join me on that quickly. Is Adekemi? Is Adekemi still on the call?
Yes, sir.
Adekemi, do you mind giving us a brief introduction about these two germane areas? Who is a financial accountant? Who is a forensic accountant?
Okay. Good evening, sir. Good evening, everyone.
Good evening.
My name is Adekemi. Let me start with financial accounting. What it means. Financial accounting focuses on the preparation, the analysis, and the reporting of financial information to external stakeholders, such as the investors, the creditors, and the regulators. So, and we have the forensic accounting, which involve the examination and the analysis of financial records to the uncovered fraud, like embezzlement and other financial irregularities.
All right, thank you, Adekemi. But to put a little bit tweak to that, accounting as it is very broad, and there are various areas of discipline under accounting, right? So if one say you have studied accounting, you could likely be specializing on what we call financial accounting, which entails that you have to work in an organization. The organization has to carry out their day-to-day activities, and at the end of the whole process, you prepare a financial statement. When you're doing that, we identify you as a financial accountant. And that is what we are saying, that for you to be able to do that, you must have religiously followed the accounting standard. But there is another emerging area in accounting practice, which we call the forensic accounting, right? Remember, we talked about auditing is still a part of accounting. It's a distinct discipline on its own. We've talked about taxation is a distinct discipline on its own. But very interesting one that is emerging is what we call forensic accounting. So the whole idea about forensic is bringing light to what is dark, bringing light to what is mysterious, bringing meaning to what is confusing, right? And one of the many a time when the word or the expression forensic accounting is mentioned, one of the first areas we tie it to is discovery of fraud. Yeah, it is very correct. It relates to identifying what are the activities behind the alleged fraud, who has committed the fraud, what are the weaknesses in the system that allow for the perpetration of that fraud. But I would like to say that it goes beyond detection of fraud, right? There are occasions where financial misappropriations has occurred and there has to be a witness in court, right? You will agree with me, addressing the cases in court is primarily the function of a lawyer, right? But when a lawyer then requires a witness on activities that is accounting related, it is beyond the scope of what a regular accountant can do. In that case, a forensic accountant will then come into play. Before the forensic accountant comes to the court to bearing that witness, he must have carried out what we call the forensic investigations. A lot of processes are involved in this. So technically, I've been able to say that a forensic accountant don't just get involved in detection or activities leading to detection of fraud, but they also carry out investigation. Why did this thing happen? What are the weaknesses in the system? Who did what? Why? What are the activities that happen within the system that led to somebody imbibing or giving a second thought to carrying out a fraudulent activities, right? That is also there. There are occasions where there are what we call money laundering, right? A part of forensic accounting also addresses the instance on money laundering, right? There are instances where there are civil litigations, right? Maybe you have instance whereby a couple in a family actually carries on businesses together, right? For a reason beyond their control, their marriage has to be dissolved. And you need an independent valuer to come and investigate. How do we not just separate the marital commitment, but also their investment in the business, right? So it's a very complicated case. If you have a couple that have been married for say 10, 15 years, they have been doing businesses together even before they get married. And at the 15th year, they decide to go their separate ways. Who will be able to help in ascertaining what is due to A as opposed to what is due to B? It's a part and a function of a forensic accountant. So these are part of the things that we just want to open your eyes to. In a couple, in the subsequent months in the year, we will be doing a thorough, in-depth review of these areas so that you can understand what forensic accounting entails. It goes beyond just fraudulent activities. There are a lot of other witness in court that can be partly attributable to deliverable expected of a forensic accountant. And set of civil cases is also there. Money laundering is also part of it, and many other issues will be throwing much more light on much later. We hope that we've been able to have make a little impact on you. We've been able to add some little value to your pounds of knowledge. We wish this continue, but because of time, I know a lot of people will have other things to carry out in the day. For everyone who has taken time out today to participating in this session, I want to say a very big thank you. But before I wrap this up, I would like to give each and every of those colleagues of mine who had participated in this discussion with me to give their closing remark on the topics that they have addressed. Let me start with Fuhad. Fuhad, are you still around?
Yes, sir.
Yeah, Fuhad, what closing remark would you like to give to your audience?
So, in as much as all we've spoken about is all about tax planning in the local level, so tax planning can be done in the international level, and that's where you consider the likes of tax havens and tax treaties between countries. So tax havens are countries that they pay lower tax compared to other countries. Then you can also consider double taxation reliefs. For instance, Nigeria has double taxation relief with 16 countries, including Canada, UK, South Africa. So instead of carrying out trades and partnership with countries outside the treaties, you might want to consider having partnership with countries within the Nigeria has the double taxation treaty with to reduce your tax liability. Thank you, sir.
Thank you so much. That's very excellent. Very, very good. Before I go to the next person, I think somebody put their hands up and want to ask a question. Clement, right? Clement, do you want to say something? Okay.
Hello. Good evening, all.
Yeah.
I hope you guys can hear me.
Yeah, we can hear you very well.
Yeah. Thank you for hosting this meeting, the KCP family. I would like to ask Cole or any of the speakers this scenario-based question. Recently, we've been having flotations in our naira and dollars. An individual went to bank, got $10,000 at the rate of 18 million naira, thinking that in 90 days he would be able to hold that $10,000 and do a change. Within a week, the naira starts appreciating, and so that dollar start diving. Currently, we are between 8,002, 8,003, and this guy is already neck deep in water because he had got to pick up loan that he could not be able to hedge or substantiate the fund. He was hoping on speculations. Now, I would want to ask, what is the best matrix in risk management and such investment? Because I feel this was done out of the regular, let's cash in with the naira messing up and how this can play out. So what do you feel would have been the best approach to resolving such investment, so you end up not having to go and borrow and losing out in the long run? Thank you.
Hey, Clement, if I start this discussion today, we will not leave here. I will give you a little tip to that, but what I can only promise is that maybe we'll consider this topic that you have raised. It's actually addressed by IS 21 in our next month's publication, right? So that we can have much more time to address this, right? But the simplified thing to it is that every business has their appetite to risk, right? When you are making any decision, you have to consider these very risks, especially when you are operating your business in a very volatile economy like that of Nigeria, right? What I will have expect when that kind of person is making that decision is to have do some sort of hedging, right? Or to possibly consider that sort of investment you had wanted to make. Is it possible that it's not even benchmarked to any of those volatile currency at all? right? I've had several conversations with people on this issue of Naira versus dollar. The question is, why do we have to do most of these our transactions benchmarking it with dollar, even when we are not even dealing directly with the US? What could our government do as a way to even edging this out? And we have precedents in the world. I don't think China will want to do any transactions with you and we'll be talking about dollar. Why do we have to do that? Right? So it's a conversation, it's a macro economic discussion that I expect that government will have to give much more deliberate attention to, right? But at the business level, please, when making any business decision, consider making your decision in a reverse intention. Meaning, if it is possible, don't have any of those agreements in a very volatile currency. And if it's a must that you have to do that transaction in that very currency, pre-agree the rates such that the potential risks of volatility is edged out of it, right? But we would have time to discuss this much more in maybe next month or the upper month, but we'll pen this down and advise my team to bring this particular topic to light so that we can expand it much more. Is that fine, Clement?
Yeah, thank you, Cole. And thank you to every member of the team who have taken out time to be here present. I appreciate it. Thank you.
Thank you very much. Martins, any closing remark to your audience, please?
Okay, sir. So what I'm going to say in conclusion is, as employees or students, if you find yourself maybe losing interest in what you actually enjoyed doing before, just take a break, sit down. You can even ponder on it. What do you think I'm doing wrong? Or what do you think that I should have done that to be different, right? Just sit down, ponder on it, and think of what the issue might be. And most importantly, have like open and honest conversation with your trusted friends or your trusted colleagues, because at the end of the day, depression is very real. So that's what I'm going to say, sir.
Thank you so much. Thank you so much. Adekemi, what closing remark would you like to give to your audience?
Okay, what I would like to say is we have some major standards that guide this practice, this financial accounting, which is the IFRS and the GAAP, which is the GAAP. Then we have in the US, they often use this US GAAP as it's called general accepted accounting principles, which is informed by those which
Hello, are you there? Okay, while we are expecting her to coming back, Wichi, will you just give your closing remark?
Okay.
Is Wichi still there?
Yes, I am. Can you hear me? Hello? Hello?
Yeah, we can hear you. Go ahead, please.
Okay, I'll conclude by saying that ISA 320 aims to ensure that auditors appropriately assess materiality and plan their audit procedure to detect mistakes, thereby enhancing the reliability and usefulness of the audit process and the resulting financial statements. This standard is also emphasizes the importance of considering the needs of financial statement users and exercising professional judgment in assessing materiality thresholds. Thank you.
All right, thank you very much. And on that note, I would like to call it a day. Thank you very much for everyone who has taken time out to join in this month's section. Be on the lookout for new contents for in May. We promise it to be more enlightening, and keep a date with us again on the last Thursday of the month. We will definitely be deliberating much more on this.